Stock market weekly chart review for October 24th through October 27th. Over here at Yahoo Finance, you can type in SPY. Under these different tabs here, click holdings, and you'll see the sector weighting. And this little bar shows you with a quick glance where the most weighting is of different sectors in the S&P 500. We see technology is a little over 23%, and then we have healthcare a little over 15%, followed by financials just a tad bit above 13%, and then consumer cyclical at 11.39%, and then we have industrials at 8.27%. I have some ETFs correlating with these sectors, with the exception of this one, XLY. It's actually a consumer discretionary, and when I first got these different ETFs, I was using a Fidelity website. So either Fidelity was off, or maybe they're using some different terminologies. I'm not sure. Eventually Fidelity's website just really got pretty wonky, so I needed to switch to something else quickly for these videos, so I picked up Yahoo. And today we're gonna add I don't know if we're gonna add anything. We'll see how it goes. But the point of this is that the S&P 500 could be thought of as a proxy for the overall market, and then whatever the S&P 500 is doing has a lot of influence. Whatever the overall market is doing has a lot of influence on your particular stock. If the whole overall market is trending up, then a particular stock is going to have some weight pushing it up from the bottom. And same thing for sideways, downwards. Whatever the overall stock market's doing, it's putting that effect on a particular stock. So in order to gauge what the overall stock market will do, we can watch the S&P 500. And then when we look at the different sectors in the S&P 500, we can have an idea of what it will do going forward by looking at the stocks that make it up. That's why we have these different ETFs here. And then these 5 are in the S&P 500. These are 2 different, kind of like in a way similar to the S&P 500. Like you could look at IWM. It kind of tracks the overall market. Also, you can look at the Qs, which is more of technology. UUP is a way to see what the dollar is doing, and TLT is 20-year bonds. But right now we're looking at a 2-year timeline of the S&P 500 on a weekly chart. So each one of these candles represents 1 week of trading information. This red and green stuff down at the bottom is volume. So we see the volume for this week was a little bit lighter than what it has been, but not anything drastic like down here, right? But just a tad bit lighter. This red line is a 200-day moving average. We see that 3 weeks ago we came down here and tested that 200-day moving average, and this week we had a humongous bullish run up to this 25-day moving average, 20-day moving average. 50-day moving average is here. So that's a good sign. And you can see when you look at the top of this candle, we can see, ooh, that is not pretty, is it? But nonetheless, you see this purple line right here. So you see this candle came right up to the top of that purple. Let's pull back just a little bit. Maybe there we go. That's a little better. We can see that that overall the trading came up to this 20-day moving average and got some resistance there. We can look to the left and see that basically right in here too, it got some price resistance back here at this time. Right, a little bit you know, down here it traded in that range. It's not really an exact dollar point, but it's more of a range. So right in here, it's not shocking that it would have some resistance right there. We'll pull back out to the 2-year. Right, looking to the left, we see that in that area before. Got some price congestion. If we go back even further, we see that it happened here also in the past. So that's what happened with the S&P 500, right? Big bullish rally. So we would expect to see a lot of bullish action within these sectors that make up the S&P 500. That's what we see right here with XLK, the technology sector. Volume, little lighter than it was last week, kind of a drop off in volume, which might indicate, might indicate a little bit of potentially losing steam in this rally. Healthcare, same thing with healthcare, kind of lighter on the volume, but really shot up, started the week at that 20-day moving average, shot up past the 50-day moving average, closed above it. So let's see if at the end of this week, if it's maintaining. Let's look at here in the past. It was testing that 50-day moving average, broke out above it, and then couldn't maintain it, right? Fell back down, broke out above it, way down. Now we'll see if that's going to maintain outside of that. The financial sector, very bullish candle there, strong bullish candle, and lighter on the volume. So we had a lot of volume, got this candle here. That's kind of it's a bit of a significant drop off. You know, we're back here to this kind of volume, but strong candle. Looks like price action was pretty much close to the whole top of that. Opened up a little bit below that 20-day moving average and just rallied really strongly up there. Consumer discretionary, all right, this one's not looking as bullish, still trading below the 200-day moving average. Got up there and tested that 200-day moving average, but selling brought it back. But nonetheless, we are seeing a climb in price here. It's going to be interesting to see if it can break out of this 200-day moving average. Industrial sector, wow, look at that. What a bullish candle. That's really quite amazing. So now it's a little bit under this 50-day moving average, opened below that 20-day, rallied up considerably above, closed way above that 20-day moving average. And the volume is, even though it's a little bit lighter, it's still some good looking volume. It's not anything concerning. If we see next week, if we see it really drop off, then maybe that would be alarming. And what do we think? Take a quick look at the dollar, right, in a weekly. So we see over, you know, since basically kind of the beginning of 2000, we've seen the dollar rally. Look at it, still above all three of its moving averages. Even though it's pulled back, it's in this uptrend. And so sometimes what happens is when the dollar goes up or the dollar goes down, other assets tend to move in polar opposite. And maybe that's what we're seeing a bit here. It seems like it's building hitting a top resistance here. and it'll be interesting to see if it's going to break. You see it touch down here in this little bit of support here. Price action touched there, but buying pressure drove it to close the week up here. It could, in theory, it could pull all the way back to this 20-day moving average without necessarily breaking the trend. So it'll be interesting to see if that is what will continue to happen. Here's a line chart, and I drew this channel a while ago. It's not necessarily the best channel, but nonetheless it is a channel. I don't really know what these numbers are. I wish I could get rid of them, but I'm just leaving them there. We see we're almost testing the top part of this channel, which is what we want to see. We want to see we've been in a bear market for basically getting close to 11 months. Each of these color changes here, the white color to whatever color that is, that's 1 year. And so we see basically at the beginning of 2022 started this bear trend, and I guess it is actually right now it is not at 1 year. Let's get this to 1 year so we can measure that a little bit easier. All right, now these different color differentiations are 1 year, right? You see 2022 getting ready to switch over here. So at the beginning of 2022, you see that started to drop in this trend. Now when we zoom in to get a better look at it, you see it starts changing to, I don't know how many months that is, but nonetheless, so we're almost into a year of this bear market. If we're going to get out of this bear market, we need to see the price action break out of this channel, which looks like we're going to be doing, but we need it to stay out of that channel, right? It broke out here, it broke out here, but it wasn't able to stay out. Now we have the earnings reports coming in, like Apple kind of saved the day, but Facebook and Google kind of put a lot of weight on it. And we have these midterm elections. So what we really need to watch to see is what's going to happen after the earnings reports are done and after this election season is over. When those two things are over, how is the dust going to settle? Is it going to remain outside of this channel? If it remains outside of that channel and starts building a base, which maybe could be, I don't know, build a base right in here. If it's out of this channel and it's kind of going sideways around somewhere in this range, around the low 400, high 300 area, it could do that. And then if it does that, if it's building that base, then we could potentially be looking at a reversal in trend. But if it doesn't stay out of that, if it doesn't stay out of the trend and it breaks down and it goes back into this trend, then we're probably going to see longer of a bear market. And in the meantime, what you can do is go to ihavesuccess.com, and a couple things. I suggest you download all of them, but a big one would be download this cash secured put stock selection guide. Selling cash secured put options on a stock that you wouldn't mind owning the rest of your life if you had to. It's a very safe approach in an arena of trading and investing that's full of risk. So this selling cash secured put options on a stock that you wouldn't mind owning the rest of your life, it's not risk free, but it's much safer than other forms. Like, for example, it's a lot safer than buying a put. It's a lot safer than buying a call. And when you're selling cash secured put options to acquire stock, that means you can also, after the stock is acquired, you can also sell covered call options against it to bring in more money and potentially exit the stock at a profit. And if the market's tanking, guess what you can do? You can buy a put option as an insurance policy on your position. Now, all those things start making more sense once you're familiar with trading options. So download that. You can download this. This is not a recommendation. It's just giving you examples of 3 stocks that I've been selling cash secured put options on for a long time. I kind of rotate, do this rotation, sell cash secured put options on them. If I get assigned, start selling covered call options. If I get assigned on there, go back and do the whole thing again. But it gives you not just the stocks, that these 3 stocks, they're not the only stocks that I like, but these are stocks that I've been selling cash secured put options on for a long time. And it gives you some kind of mindset of why I particularly like these stocks. When you're working with options, you're going to have, at some point, you might want to have an idea of what the stock option Greeks are. This is a really quick 1-sentence definition of each of them. It's not going to turn you into a master by any means, but it's going to give you a 1-sentence definition. After having a 1-sentence definition, you can start moving forward if you so need to. If you simply sell cash secured put options on stocks that you don't mind owning the rest of your life, collect dividends, maybe sell covered call options, you might not ever really need to deal with the Greeks too much. And this one is not directly related to trading. 3 underused tactics to transform your financial results. It's not directly related to trading. However, number 3 is very tightly indirectly related. Number 3 is out of those 3, number 3 is the only one that is actually a financial tactic. The other 2 are not financial tactics, but they will indirectly help your finances. Number 3 gives you the most bang for your buck, and it is a financial tactic. However, number 3 is the hardest to implement, and for the most part, most people do not have the dedication to implement number 3. But if you do, it'll change your life. It'll take time to implement it, but it will change your life. Hey, you might already be doing it. I don't know. Once I implemented this, life-changing, peace of mind. So once you download any of these, if I make something new for free, you'll automatically be emailed it. And 5 days, 6 days a week, I'm sending you stock market stuff. And so check it out, see if you like it. And you guys have a fantastic day. Bye-bye.